Hi, good evening. Today is Monday, May 17th. S&P 500 traded mostly inside of Friday's range for the whole day today. It made the high on the open Sunday night and was trading down a little bit until the last couple of hours of the day where we had a 20-point rally. And we closed down around 8 points. So for most of the regular trading hours, we were trading around Sogi level, as Victor likes to call it. This is the level that ends with 50 in the middle of 100, basically. And today it was 4150 level. And the market traded around it like a dozen times up and down. It often acts as a magnet of price. And today definitely was played from both sides.
I would add that some of the options data that we analyze using this spot gamma service, it shows that there's what they refer to as volatility trigger, right at about 4167, so right above the level that we're at, where this is bouncing around. And what that would indicate is that it's sort of a dividing line between where we'd expect gamma to decrease or sort of volatility to shrink and it to be trending upward in a lower volatility manner versus being below the level and it being a higher realized volatility, higher chop. And so we're seeing it's below that level. And so we're seeing a little bit more choppy. Now, if it can retake that level, maybe it will be have a more bullish be more bullish position, but right now it's a bit more neutral and choppier based on that data alone.
Right, and I agree. My position right now is kind of neutral. I don't have a strong bias one way or the other because to me the charts are murky, and so I just stay out until it clears up. If we break out above that level, I think 4220 could be reached very quickly, and otherwise it's back to the other Soji level, 4050, which is 100 points down. So in the middle of that range that we have sold off last week and then recaptured, and now we're in the middle of it, so we will see which way it breaks.
Right, and we saw a little bit more of maybe a bounce from this. I guess this is, well, this is a 30-minute chart, so it's not like it's a significant level. It's a moving average, but it's like a 230-minute moving average, but it bounced a little bit more convincingly, but it's still in a more neutral position. And one of the ones that I've been watching closely is the Russell 2000 because it was in a little bit more of a very temporarily oversold position when it sold down to here, but it's bounced very nicely from that level over the last few days. Bonds still, at least during the day, at least intraday, not very bullish, selling off, continuing to sell off from the Friday level.
Right, it was a red day again on Victor's chart when both stocks and bonds were down, even though bonds were down minimally.
Mm-hmm.
But the mover of the day was gold. It was up 1.5%, and it continues its bullish ascent. And at the same time, the charts look very bullish even on the weekly, but the digital gold today had some very interesting moves over the weekend, not just today. Right. Elon Musk, stepped on with his big foot onto the whole crypto space, and he was all over the place. And Bitcoin sold off all the way to 42,000. It was the first time since February on his comments, which is kind of very interesting because that's exactly similar to the level where Musk initially started commenting on the Bitcoin.
Yeah, the first time he pumped it, it was from about the 30,000 level up to around 42,000 level. That's right. And so this was one of the Elon Musk pumps right here. and then I think the second one was around here. And then he came out, a few hours after he said that whatever he wasn't sure about Bitcoin, and said, well, they haven't sold any, even after he said that they sold 10% of their treasury position. So who knows what I'll say tonight and tomorrow, whatever. So
he said that Bitcoin is actually highly centralized, with supermajority controlled by a handful of big mining.
Well, that's you hear that criticism, and I would say it's not really true, because it's the case that he made is there was some mine flooded and that it hit the hash power and so on, and it's like the hash power is very sensitive. If the hash power recovered almost all of its loss within just a few hours, there may be a status quo at any one time, but it shifts constantly as a result of what did anyone say, well, the Fed is incompetent because there was 3-hour period during the 2008-2009 financial crisis when there were no buyers for certain pieces of commercial paper. And yeah, I was saying they're incompetent, but that's not a mainstream view, right? That they were incompetent because the liquidity on what's ordinarily a very liquid paper market just completely dried up, and they had to step in as buyer of last resort. But it took them time. It took them like a day to do that. So it's not dissimilar.
Right. I think Bitcoin and all crypto would be better off without Musk there anyway, pumping and dumping stuff. He even said something about Dogecoin. Ideally, if Dogecoin speeds up block time 10 times and increases block size 10 times and drops the fee 100 times, then it wins hands down. So I'm like, sure, if fish could fly, many things could happen, but I have no idea. And from the comments I've read on Twitter, many people were concerned that he really doesn't even understand Dogecoin or crypto in general with comments like this. So, but I'm not an expert, so I don't know.
Well, I would say, okay, so there's a lot of development on Bitcoin. There's even more development on Ethereum. There's a lot of development happening on pretty much the top platform coins. And those are the legitimate crypto, in my view, the ones where there's a lot of activity, there's a lot of development. There's thousands of people working to build things, build applications and on them. But there aren't any developers for Dogecoin, and there haven't been since 2017. There were some little things that were built back then, but nothing's really been done on it. And so in my view, what's really going on is there's still a distribution problem in a lot of crypto. There's a handful of people in crypto call them whales. They're basically kind of oligarch that they were in early enough and they jumped into the Bitcoin when it was 23 cents or something, or Ethereum when you could get roughly 1,000 of them for 1 Bitcoin during the ICO with the initial offer. And so they've got very large positions. And in something like Dogecoin, they might have gotten a couple $100 million or $1 billion Dogecoin back in 2014, almost as a joke, because it would have cost them at the time, let's say like $20,000 or something like that. And so if you've got $5 million, it's $20,000. You're farting around and you're having fun with it, and it's a fun community and you're joking about it. So they put that in it, but many of them just held on to it till now, where something like Dogecoin is now trading at 48 cents. And so if you've got 300 million of this, then and you're pumping it, oh, now it's $150 million. So I think that Elon Musk is, whether deliberately or unwittingly, I don't know which, is he's carrying the water for some of these people that are pushing this narrative and pumping it. And yeah, he gets his information from his own sources, and I don't know what they are, but he's got both some very accurate perceptions, but also some very inaccurate ones. So he's getting his information from some, not always reliable sources, and it creates a lot of unnecessary volatility and confusion. But the thing that's interesting to me, just looking at like charts and looking at these individual opportunities, what I've been thinking is that Bitcoin would have a serious correction going into, I figured it might be a little bit later, not late spring, more like early summer, but we're seeing a pretty significant correction. It never recovered its high from April, which around April 13th, when it hit its all-time high, and now it's just a small amount, just like 6% above it, or it went down as low as, let's say, about 3% above its 200-day moving average, which I think that it will tag before this is all over, whether it's this week or not. It could probably bounce here pretty nicely, but I think it'll tag that before resuming a bull market. And Ethereum is a much more bullish case, where I think that Ethereum, there could be some downside, but I think there's a lot of interesting support levels here that it had on the way up, and they're still quite a way down from where it currently is, but still for the month it's up significantly. And all of the proof of stake coins like Cardano is it's still up for the week. So as bullish as things may be, or bearish as things may be for Bitcoin, they've been quite bullish still, and they kept their relative strength. If you look at ADA against Bitcoin, I mean, it's skyrocketed, nearly doubled, or 1.5, it did double against Bitcoin just in the last few weeks. So even against Ethereum, it made a high back here in like February, and it's been below that level since then, but it shaved away about half that loss. So it's so some of the others like Polkadot, they're still not quite as bullish as Cardano, but they're still within their striking distance of their all-time high that they made just a few days ago. So I think that these are the ones that, as the maybe Dogecoin could, I don't know. I personally don't like. I do trade, as I was saying to Elena a little while ago, about 20-30% of my crypto, but the majority is in a longer term position that I don't want to have to trade every day. And so something like a Dogecoin, you can trade it, and it may be a lot of fun to trade actually because of these pumps, but I wouldn't recommend it be where you're allocating let's say 20-30% of your tradable assets. It's just it could crash just as easily as it's going up, and so that would be my thought. But some of the things that like what we saw today that I thought was interesting is Tesla continuing to be somewhat bearish. I think that
well, did you hear, Andy, did you hear that Burry said that he has released his K13 or whatever, the filings, and he's extremely short Tesla and the big short guy, and he has huge put position, which is in notional equivalent almost $500 million, 530 million in notional. He's short 800,000 Tesla shares.
That's that's a gutsy,
It's like
that's a gutsy call,
40%,
right?
yeah, 40% of his fund or something like that. But he's been short Tesla on and off for a while, since we remember, maybe even last December. So I'm not sure how he trades around it. Obviously, I'm not sure. But yeah, that's a massive position. And the chart of Tesla right now, it's also at a very interesting level. If it doesn't hold this level, I think it's going to be not really good for the stock, but we'll see.
Yeah, well, the all of the one that I've been, that I like to watch as sort of an indicator of the momentum trades is the ARK Innovation ETF, and I see that as a great indicator. And what's interesting is that this last week it seemed to sort of might have put in a bottom. They would need to really rally here pretty convincingly to for me to consider it a reversal. But it's been, we had some huge down days here where it was just gapping down all the way, and even this the last few weeks, and so it's because all the components were crashing, but she's Kathy Wood is the one who manages that, and she's investing in, Tesla is one of her big positions, but things like Coinbase and so on, that where that had a big gap down today because of what's happening. And
well, they have Coin also announced that they're selling a whole bunch of convertibles, $1.25 billion of convertibles. And so that's also, I guess, dilution, so affected the price a little bit.
Right. Well, I think it's more, to me, what Coinbase seems to be driven more, the stock price. I agree that's bearish, but the stock price seems to follow Bitcoin much more closely than anything else, whether it should or not. Now, longer term, will follow other things, but I think in the near term, it's been following Bitcoin. So like when Ethereum was rallying, we could, like stick where probably most of their transaction revenue is coming from Ethereum-based coins or tokens. And so if you look at, they were declining as Ethereum was skyrocketing.
Right.
And what's pulling Ethereum down here? Well, it's more Elon Musk tweets, Bitcoin going down and pulling it down with it. But Coinbase, it should have been, if you're following where are they getting their transaction revenue, it's more from excitement about these Ethereum-based coins, anything from a Uniswap to synthetics and so on, where they're the trading activity in these names against either Ethereum or against US dollars is being driven by these will go up and be bullish along with Ethereum. So it's interesting. It's actually a maybe there might be a trading strategy that could be built around this, like a near-term trading strategy that takes advantage of the fact that it follows Bitcoin more than it does actual transaction volume. And so there could be, if Bitcoin continues to just bounce around, even as transaction volumes are going up, it could be a good buying opportunity in Coinbase if it continues to stagnate. So,
right, but like we were saying yesterday, the other day, Friday, volatility on it is like 85% on coin options. What would be the bullish trade on coin, given that the volatility is so high and it seems?
Oh, I see. Well, I'll tell you what I think that it's the same. I think the way to trade it is to trade hold overnight trades or hold over the weekend trades. And it's the same thing where there's, I think, an inefficiency in the fact that Bitcoin and all other crypto trades 24/7, whereas Coinbase trades during regular stock market hours. The the futures, Bitcoin futures and Ethereum futures now, they trade, let's say 23 hours a day, 6 days a week, or 5 days a week, really. And so 5.5 days a week. So it's, you can take advantage of it if you, if there's the idea that, let's say Bitcoin will rally overnight, then you could either buy it after hours, but probably Coinbase is moving along with it after hours. But if it looks like it's going to make a convincing bounce or a top, then you trade with the direction of Bitcoin, and then you close the position first thing in the morning when it opens, because it'll follow Bitcoin either up or down. So I think that's the trade, but it's a little bit of a speculation on if so. In other words, you need to have a model that gives you some indication of where Bitcoin's going to go in the next, say, 12 hours. And then I think that that can be, there could be a good strategy built around that. You're just holding it, your risk is holding it overnight into the next day.
Right. Well, also, we're planning to talk about biotech today. So just to switch topics.
I'll mention a few names here. I can talk about just a few. I think that the overall case in the market right now, I'm going to the Nasdaq Biotechnology ETF, and I think it's still in this kind of neutral position, or it's actually been pretty bearish. And there's a reason for that, the fundamental reason, and that is because the Trump administration was not that friendly to pharma and biotech when it came to pricing. Let's say the Obama administration, Bush administration were very friendly. And so these stocks had huge rallies during those presidencies because for all of Obama's talk or rhetoric, it was pretty hands off when it came to drug pricing. And these biotech stocks require, they tend to be, the products tend to be very high priced when they finally come to market. And if there's a threat that they may not be able to recoup their investment that they spent in order to develop a product, then it threatens the business. So they may not submit something to the FDA versus submitting it, or they may not do the same size clinical trial, and so it's just not as successful. But I think that there's a limit to the bearishness that what has happened over the last year is there's been almost all of the development and the new products that have been approved have been related to COVID and infectious diseases. And that may have been necessary, but there's a lot of other things that make people sick. And the biggest one where there's been an enormous amount of development over the last, say, 5 years has been in cancer therapies, oncology therapies. And that's an area that, again, right up until COVID was probably the hottest area of the market in terms of biotech. And so all of the stocks like, and this isn't purely cancer, but something like the gene editing stocks like CRISPR or Editas or NTLA, where all of these have pulled way off of their highs. I would say Bluebird's not really gene editing stock; it's more of a gene therapy stock. But the main ones are the CRISPR and the Editas and NTLA. And I'd say all three of these, NTLA has the most bullish looking chart of the three, and where there's less question about whether the company is going to have successful products. There's been questions around CRISPR's the side effects of their gene editing approach, as well as that of Editas. And NTLA as maybe the one that is considered to have the least side effects. And so maybe that's the reason for the differences that you're seeing in the stocks.
Right.
So that's, one sector that I think is really interesting. And I'd want to see a little bit more of a kind of a reversal of the general bearish cast of the biotech sector. But I think these could all be good plays longer term. And they could be very exciting trades, by the way, because if you go back and look at, well, even in November, when NTLA had this big rally, it was a huge rally from
Right.
20 up to 84. So quadrupled with this crypto-like return in a matter of just a few months. And then Editas rallied about the same time from 27 up to 88. So a very similar kind of rally. But since that time, it's right back to where it started. Intelia is still just a little bit off its high, but CRISPR, there again, 109. It's back, basically back to where it was back in September, almost. So these have given up some huge gains that they got back, like leading right up into February. Another sector that I think is interesting, that's a little bit more bullish, is the diagnostic sector.
Mm-hmm.
And this is where there's, like, for example, diagnostics on a fetus or fertilized egg, embryo, that being able to do all of the genetic profiling and so on. And this is clearly an area where there's been a lot of growth. And so that's what, like a Bruker or Illumina, the stocks, Bruker's been a lot more bullish, and Bruker has had a really nice rally from October when it was as low as 40, now it's 67. So 50% rally, not the rally of the gene editing stocks, but a pretty nice rally. But then some of the traditional biotech I mentioned, Bluebird, where this is one that they've just gotten killed. It was back in 2018, wow, trading over 200 in 230 range. And it was believed at the time that they were about to come out with a therapy for both beta thalassemia and sickle cell anemia. And that hasn't happened. It's been very hard for them to get FDA approval for these therapies, because it's basically like they build a custom virus for the individual person and then inject them with this virus that then fixes their whatever defect there is in their DNA. And there have been some safety concerns. There was back here, even though it doesn't look like a very big drop, it was quite a big drop in percentage terms, where there was one patient who developed blood cancer on that was participating in the clinical trials for sickle cell anemia. And that was enough to kill the stock. Now they released later that I think this bump was them saying, well, we didn't find any kind of causal relationship, and the FDA agreed with us. But it's too late. It's a matter, until the company can launch a product, it's just a matter of perceptions, and that's what's driving it. So it's a bit like biotech has a lot of the characteristics of crypto, that until things are developed on these platforms, like what we might see with Ethereum, it's just potential. It's just an idea, and so that's the challenge, bringing products to market. But you can look at some of the big names. I think following the big names is critical. Like I think that two of the leaders are Amgen and Regeneron, and Amgen really hasn't. It's rallied. It's sort of a steady grower, and it's rallied over the years really nicely. And so this is like a widows and orphans kind of stock. You put money into it, and it's a steady grower. It's less of a trading stock. Whereas something like Regeneron, I consider it to be a very good trading stock. They have a wide big portfolio, and they have products that have been used very successfully in COVID treatment, for example. So they had some therapies there, but they have products in the inflammation space, really across some very interesting disease states. So this can be an interesting trading vehicle, and I think we may be it's sort of at a neutral position right now. It's fallen like everything else from its highs, which I think this high was driven by COVID more than anything, and just the sexiness around their short-term treatments for COVID, but which turned out not to be the ones that were widely used because they're quite expensive. So so it's pretty much sold off since July into its low in March, and now it's bounced a bit. So so maybe unlike something like Pfizer, where there's a big portion of their revenue is going to come from COVID vaccine over this next year, and it's rallied on the basis of that, like right from March, where they finally really launched their vaccine. But I think with something like Regeneron, it's other things that are going to be carrying carrying the company and carrying the stock going forward. So I want to see it get back above this, where it broke down here in let's say 550 range, and I think it could be a nice trade above that range, and maybe up into the 640 range. But then it might be time to reduce the position. But this is one to look at. I think it's a very solid company, and it's big enough that it's a very liquid stock as well. So those are just some ideas. I think, though, that from a longer term perspective, because of the big sell-offs in some of the gene editing companies, it could be there could be a good entry point coming up if you like buying bottoms, but it could take some patience for them to have the skyrocketing rallies that they had this last November, October.
Right. Well, like you said, a lot's going to depend on what the Biden administration is going to do as far as the regulations go. And just today, speaking of vaccines, Biden said that those who are not vaccinated will end up paying the price. I'm not sure what he means, but sounds like a bit of a threat to me.
Right. Yeah, it's that type of thing that, I mean, the pharma and biotech markets are entirely they're entirely based on intellectual property and the idea of the patents being protected. And the United States has, I mean going back to the early 20th, late 19th century, has always been the leader in protecting U.S. companies' patents globally and so on, and where if they're sort of waffling on that to meet this perception of that we're denying the world high quality treatments or something. I think that's really dangerous rhetoric. I mean, just myself, because most of these companies like Pfizer has been giving away millions, hundreds of millions of doses of their vaccine, giving them away to poor countries. They don't need to break the patent for Pfizer to do that. They were doing it already on their own. And so have all these other companies, Moderna, they've been giving away hundreds of millions of doses because they're making a nice profit from them, but they need the profit to develop their next product, right? That's the key. But they are willing to take a smaller profit and give away these doses to countries that aren't going to be able to afford them anyway. And there's a big NGO, a national non-governmental organization called Gavi, that coordinates all that all these, I don't know about Moderna, but I know that Pfizer and J&J and GSK, they're all members of Gavi, and they donate hundreds of millions of doses of all sorts of vaccines to that organization, and they distribute it to countries like India and Bangladesh and so on, Indonesia, where there's a poorer population. So,
right. But unfortunately, like one of our listeners said in the comments, that science has become a problem these days. It's became super dogmatic and hijacked by special interest groups, to paraphrase what he said. And I kind of agree, because there is a major problem. For example, like I keep saying, CDC just released the guidelines that vaccinated people do not need to wear masks. And yet the governor of California, New Jersey, mayor of Chicago, and various political figures, mostly unfortunately on the Democratic front, have came out and said that we are still going to wear masks and demand that our people wear masks as well. And so where is the press, where is the media, where is the CDC saying that that's unnecessary? Are we listening to science or are we not? And media always calls the other side of the Republicans that they're anti-science, when they're calling the Democrats anti-science if they're going against the CDC. And even the pharma companies, shouldn't they have a say? If they had a vaccine, they must have tested what is the vaccine for? If you're vaccinated and the vaccine doesn't help you prevent or spread the illness, why are we all being mass vaccinated then? There has to be some sort of objective science behind the vaccine. And yet we kind of just go with politics. Just a few weeks ago, even CDC said, if you're vaccinated, you need to wear masks. Now, a few weeks later, you're vaccinated, you don't need to wear a mask. Did the science change or did the politics?
well, and to some degree, I think that what's happening at agencies like CDC, they can tell that there is a lower tolerance for just the lockdown mentality that existed even a few months ago, and that people are tired of it. Just being out in New York and walking around over the weekend, it was a lot of people out, and it was packed. It was like New York before COVID, and I had not seen it like that in a year. So it was really interesting to see. But I think that where it's just people finally deciding I'm going to get out regardless of what people say or regardless of the risk, and not wear a mask. And then there are places like Florida and Texas and so on where they're just going ahead and lifting these mask mandates because they want the economy to restart. They want the restaurants to reopen and so on. So
meanwhile, because there's lots of indication that masks simply do not work. Japan being one of them. They had at some point 98% compliance. They were wearing masks even before COVID, and with COVID, it was super high compliance. No country in the world probably has high compliance on masks than Japan, because they're very group-oriented and conscientious and all that. But even with that, their cases are going up rapidly right now. They're considering canceling the Olympics altogether. And so if you can't get COVID under control by wearing masks, even in Japan, what hope do we have here? And now that we're all vaccinated, why do we still mask? It becomes some sort of badge of right. I don't know, honor or something.
Well, it's I guess my view is that there's a sort of sunk cost mentality involved in it. That people don't like to admit when they're wrong. If you're a trader, it's deadly, right? To not, okay, that was a bad trade, I better just get out of it. But I think as a trader, if you survive, you learn to do that, and whether as painful as it may be sometimes. But I think that political figures and these agencies that have been kind of politicized to some degree, they feel like they can't just say we screwed up. Because it's going to be used against them in the next election or something, and right. Well, maybe it would be, but it's better than continuing to subject everybody to lockdowns and so on. And so that's, but they can't admit that well, our thinking has changed. Maybe we need to, we're going to take a new course now. It had to be, it couldn't be, even though, let's say Trump back in March of 2020 said, whatever, 14 days to slow the spread. And then we were locked down for 14 days, but then nothing reopened, no one lifted the lockdowns after that time. And
14 days turned into 14 months. It's unbelievable. And we're supposed to be the freest country on earth. I know I've said it before, but it doesn't change the fact that America was supposed to be the freest country on earth. And all of a sudden the government shut down the businesses with no due course, no due process, no studies ever before have been done. Nobody ever before suggested lockdowns is an effective policy. But it doesn't matter. 14 days, 14 months.
Yeah, well, that's I think that is, I mean, not to get preachy or anything, but I think that that's part of why, let's say, things like cryptocurrency has rallied, is just and why we see the first whiffs of inflation. In my view, inflation isn't even, Milton Friedman said, inflation is always a monetary phenomenon. And that's the case he made. And it's a good book. But my view is inflation is really about a breakdown in trust. Trust in the ability of policymakers to do what they need to do to keep things on track. Now, I would say that things like the Fed and so on, they have this maybe a view that they have more control than they actually do over the economy. And so now what we're seeing is where they've tried to stimulate the economy out of deep recession, they have no idea when to stop. And even if they wanted to stop now, they can't. And so that creates this feeling of distrust that how can the dollar be sound if they're not I think it was William McChesney Martin back in the 70s. He said the Fed's job is to pull the punch bowl away before the party gets out of hand or something like that. And they're not doing that. They're just leaving the punch bowl out.
And expanding their mandate to global warming and other very vague things that we can't even estimate. And they're supposed to be quantitative. And we can't.
Right, systemic racism in the financial system or whatever, where, okay, well, how does that drive Tesla stock, or, what does that have to do with
buying Apple
bond prices or something, right?
Yeah.
Where, hey, just help us make a market in bonds and manage the bond market effectively.
Right.
I mean, even just starting with the simple stuff would be a big help, but it's so I think it's a breakdown in trust, and so people maybe like back in the 70s where gold skyrocketed because it was a sense that, well, this is a safe haven. It's a little bit of a safe haven mentality. I don't think it's entirely replaced the function of gold, but it's in a way it's got some of the gold and precious metal type characteristics.
Well, all we need is Elon Musk to tweet something about actual gold instead of digital gold and watch the sparks fly. I can't wait.
Well, think about, here's something to consider, that I think if you're even a small trader in gold, and I own gold, and I just know that when I've bought or sold gold, I have to go to a dealer. And I have to, let's say, wire some money to this dealer, to a dealer that I trust. And then a week later, I'll get my gold. And then if I want to sell it, I could sell it back to the dealer, but I would have to take a steep discount, right? And if I want to not get that steep discount, I have to sell it at a marketplace like eBay or something like that, or an auction site, where then I have to deal with someone kind of one-on-one, and maybe I'll get paid, maybe I won't, whatever. I can, you can work through that so you don't get cheated, but it's a complex thing to sell even a small amount of gold. Whereas with Bitcoin or Ethereum, you could spend hundreds of millions of dollars or billions of dollars for a very small amount. And there's no interaction trying to figure out who you can trust, how do you escrow the money and so on. There's none of that. You just send it and that's it. And you know when they receive it. Vitalik Buterin, who is one of the founders of, maybe the lead developer, one of the founders of Ethereum, he received as kind of a note, gesture of gratitude by the creators of the Shiba Inu, which is an imitation of the Dogecoin token on Ethereum. And so the Shiba Inu token was created, and they gave Vitalik Buterin like trillions of this token as a gesture of gratitude, and also thinking, well, hey, if we give him a whole bunch of it, maybe he'll have to like tweet about it or something, and then it'll pump it. And what he did this last weekend was he gave away 10% of what they gave him to COVID relief in India, which was worth hundreds of millions of dollars. And then the other 90% he sent to a address that's considered like a burner address. In other words, you send it to that address and there's no way for it to ever be recovered. It's called burned when you do that. And it's effectively like throwing away the coins or deleting them because they can never be spent. You'd have to find the private key, which it would take quadrillions of years for that to happen. So he effectively got rid of those coins, and that pumped the Shiba Inu token because he got rid of a huge chunk of the supply of this, and so they that community that is arisen around that token was very pleased about that, because he was charitable with a portion of it, but then he burned almost all of it and reduced the supply. But
no, I have to say, none of it makes any sense to me whatsoever.
But my point is, he moved billions of dollars. The reason I brought that, he moved billions of dollars without for effectively about $50, whereas right. I had to wire some money today, like for taxes and so on, and it cost me, it cost me that much to wire a lot less than $1 billion around. Right. And so so on a percentage basis, it's much cheaper to use cryptocurrency, but then there's the permission aspect where the thing about like the fraud is it's the excitement of a new asset class is what it is. That there are parallels historically. I think the important parallel is really more toward the emergence of the U.S. stock market after the Civil War, where there were scam companies, there were legitimate companies that arose, like GE in that time period, and so it's like a mix of legitimate and phony and joke, and it's a largely still unregulated market, and it costs very little to bring a new token to market. So there's people doing it for vanity reasons, people doing it for a joke, people doing it for a meme, like Dogecoin.
Isn't there some coin that's basically FU Elon or something like that called?
There's some sort of Elon token, but I could create one that's Andy.
So why don't we just create a token and call it a fair token, and we create the exact number as the population of the planet, and give every person 100 or whatever arbitrary number of those tokens and call it a fair coin.
There's actually, so there are a lot of experiments like that, actually. And so there's a principle called fair launch. that is where some people have tried to launch their project, like with totally legitimate projects, like one that I participate in a little bit called Badger, which is about what the whole principle of it is to how interest earning opportunities on Bitcoin, but doing it on the Ethereum network, but tokenizing Bitcoin and then finding strategies that are an interest on it. And but they did a fair launch, and there have been some others that do a fair launch where there's a couple principles behind it. One is that you don't just reward people that put the most money in, that there's some sort of flattening of that distribution, so that you can be, so I mean, by participating on being, let's say, not a whale, but maybe like a dolphin, you know, size sea creature, that I would, I did pretty well from that. But even somebody that had deposited just a little bit, they did okay. They got something from that. That wasn't just a tiny amount, as if it were distributed purely on the basis of the distribution of deposits. So there's that flattening effect where they do something like they take the cube root or the fourth root of the deposit value to determine the distribution of how to distribute the coins. And then there's another principle called quadratic voting, and Vitalik Buterin has been someone that's really pushed for this on different projects, where there again, like when it comes to voting on proposals, that the votes count, like it's the square root of the votes that count, rather than just absolute votes, like with a shareholder corporation, where if you own 1 billion Tesla, then you've got 1,000 times the voting power of someone with 1 million Tesla, or 1 billion times the voting power of someone with 1 Tesla share. But with quadratic voting, it would be like the square root of that. So someone with, let's say, so someone with 100 would have, not that much less than someone with, let's say, 160 or something like that. They'd have, so things like principles like that, using like 900 or 1600, it would be, by taking the square root, it would be like you had 30 versus 40 rather than nearly double. So it's so there's some ideas like that where they're trying to respect the fact that some people are going to deposit a lot more and contribute a lot more, and you still have to keep that ordering, that rank order, but you can flatten it. And I think that this appeals to a lot of people that are millennials and Zoomers, where the thing that you hear a lot in like the social science research is that they feel like, everything's already owned, like the boomers came and they own everything already, and here I am, just trying to make it. And millennials have something like 3% of the wealth in the whole economy at an age when, at their age, which are compared to when boom people were their age, they had something like 16% of the wealth.
But one of the aspects of the statistic is that simply people live longer. People were dying early and distributing the inherited wealth to their children, versus now the life expectancy is increased. And there are many other ways of looking at it where the statistics is simply not really valid.
I agree. That's definitely true. Yeah. But I think also, I just know that my family personally, it sort of skipped a generation. There weren't any boomers. My parents were silent generation. Their parents were the whatever the generation was before the interwar generation. But yeah, that they really lived through the Depression. My grandparents, and I just know that my grandfather never made more than, let's say, $8,000 a year as a bank vice president, and he retired in 1965. But he had thousands of shares of the company stock that they'd given him over the years. And then that was a significant amount of wealth that he had built over the years, because they just didn't live in any kind of lavish way. Whereas I think the boomers live relatively lavishly in a way that their parents didn't. And their parents were savers. They'd been through the Depression. They'd been through these very scary experiences. And really, since World War II, although we've had recessions, we've not had anything like the Great Depression that has transformed the thinking of a generation against debt, towards savings, and so on.
Right. And now we're in a generation where he just burned 90% of his cash. I still can't get over that. Why didn't he contribute 100% to charity? Or
because there's an easy explanation for that. But if he donated 100% to charity, then they're going to have to sell that 10% and get cash or something for it in order to turn it into whatever medicines or blankets or whatever they need to help. And so selling 10%, well, it'll hit the value, but it won't kill it. Whereas if they had 100%, then it would actually subvert the value of having given them that amount. They'd get a little bit more, but they wouldn't get that much more. But I think that,
I get the math behind it, and I get that they would have crushed the price, but it's still nonetheless extremely counterintuitive that there is this coin that's created for whatever reason, so that the more of it's created, the less it's worth, and then you could just burn half of it, create more. Like, all of that is just, I'm having the whole hard time wrapping my head around it. When with the dollar, it's a little simpler, however complex that is.
Yeah, I don't participate in these types of things because it's a little bit, there's a kind of Ponzi nature to it where you have to have a flow of new people coming in to prop up the value of it. And I've been investing and trading for a long time before I got involved in crypto. And so I'm still maybe thinking that mentality where there's got to be some like fundamental underpinning and to this. And to me, there is for coins like Bitcoin and Ethereum and Cardano and so on. But some Shiba Inu, what's the basis for that having any value? And the answer is, well, there's a community. There's people that find it fun and they might develop things with it, or they might do projects with it. And that actually means that it's not valueless, but it's more like script. It's like if I created whatever Andy dollars that I'm giving to people that come into like a street fair or something like that on my block, and they can spend there. It's like that. They have value maybe within the street fair, within that closed environment, but they're not actual money. But the ones, the platforms that are actually building something, they have value that's based on that product, and they're building a decentralized economy, and it does have value independent of just the community, but because there's actual projects, there's software, there's real platform websites and apps that are running and that make people money, that make loans, that help people trade, these types of things. Right now, it's mostly on these financial applications, but it's when there's a layer on top of that where the financial applications are kind of in the background, and people are just able to say do transactions without thinking about it, like where the money's coming from or how it's flowing from one app to another, and some of that machinery is handled for them. And that's where, when those pieces get connected, that's when it has even much bigger value than what it has today. So it's sort of like it's the emergence of a new asset class that we see in real time, and the goofy things and the fun things are, in a way, it doesn't bother me because it does scare people off, and it's what holds the value down because it keeps people away. I don't mind that actually, because I said, well, okay, I'm perfectly happy to earn 20 or 30% on my stable coins, because as soon as when everybody comes, it's not going to be 20% anymore. It'll be 8% or 6% or 2%, and it's right now it's because it's still a niche, a niche investing space that you can get those types of returns, but it's not going to be the case forever. It's not going to be the case for much longer, probably in the next year. Those yields will collapse with things like I was mentioning AAVE, where they had announced that they're going to be helping with custodying
Right.
and I can show my screen on that, but that they're going to be helping with custody arrangements for decentralized finance for institutions. And this is already the leading lending platform on the Ethereum network, and they've extended to a few other networks. But so they're not just tied to Ethereum, but they are going to be launching what they call AAVE Pro, which will let institutions put their assets in this, let's call it custody environment, but they can invest on platforms like Yearn or AAVE or some of these others and get the returns or lend their own assets for interest. And right now, very few institutions do that unless they're very crypto specific, because they don't want to, they can't put the client assets at risk for regulatory reasons and compliance reasons. And but AAVE will handle this for them using the service, so they can now invest in these. And so that once that flood comes, and there's instead of there being like $80 billion in DeFi on Ethereum, when there's 800 billion, the returns will collapse. But right now it's 80 billion, so it's a fairly small amount. It's not insignificant, but it's small.
Right. Okay. Thank you, Andy. Again, I've learned a lot. So much interesting stuff going on in crypto. Some of it is very interesting and some are outright insane, but interesting nonetheless.
Right.
And
Thank you.
I guess we'll be back on Wednesday.
Great. Thanks, everybody.